Hi there, welcome to Nepi Invest. As an investor, I do have a group of big investing rules that I have written down that I do follow. The reason I call these big investing rules is because it has to do with the type of companies that I want to invest in. That's why I consider these to be big investing rules. I also have a group of little investing rules. And the reason I call these little investing rules is because they have nothing to do with the type of company that I'm going to invest in. They just have to do with other facets of my investing life. For instance, one of my little rules has to do with not making decisions, investing decisions, when I am tired, particularly after I have completed 2 night shifts in a row. In the past, I have made investing decisions when I am tired after 2 night shifts in a row, and I've usually come to regret those decisions I have made after a few days. So nowadays, what I do is when I want to make an investing decision, when I want to buy or sell a company in my portfolio, when I am tired, I'll just wait a few days just to see if I still want to make that decision when I am fresh and when I'm alert. And it's actually worked wonders for me over the past few years having this rule in place. Now, in today's video, I'm going to talk about another one of my rules that I do follow all the time. And I've seen 3 examples of this rule play out over the past week, which is not surprising because right now we're in August. It is reporting season. We are seeing companies release the half year and the yearly reports. And this is the time of year where we do see this rule come into play. So let's talk about this rule and exactly what I am talking about. Now, my rule really finds its root in this Wall Street adage that states amateurs open the market, professionals close it. Now, I don't absolutely believe in this. In fact, I do find this adage to be a little bit condescending, a little bit arrogant in its making, because it's suggesting that professional investors make mistakes and professional investors don't. And if you are investing, you should just wait to the close before you make your investing decisions. Now, I do know quite a few amateur investors, and I'll use that term amateur quite loosely, who perform significantly better than professional investors. So I think it's just a way for professional investors, this adage, to really downplay the importance of amateur investors and their success. Now, I have done a little bit of research on this. Does it make a difference when you buy during the day? And to be fair with you, if you're investing for the long term, this makes no difference at all. But there has been a little bit of research on this. I'm not sure if this is peer-reviewed research, but a little bit of research I've found that suggests you'll do a little bit better if you buy at open compared to the close if you are investing for the long term, but the difference is minuscule. So I think this adage is a little bit condescending. You don't really have to worry about this rule if you are investing for the long term. But there is one scenario when I will use this rule, and this comes back to my rule. And so let's have a look at the rule I do have in place that has found its root in this particular Wall Street adage. My little rule states never buy on open when there is an event. So we have to actually define what an event is, and this is the most important part of this particular rule. And it will become clear why I follow this rule as we look at the 3 examples we have seen over the past week where this rule does become applicable. So according to my rule, an event is a price-sensitive announcement. So some sort of news flow from a company that can move the share price up or down. So we're talking about drilling results from a mining company, the announcement of a significant contract from any ASX company, change in CEO or the CEO resigning, any sort of announcement that could drive the share price up or down. But I am excluding 2 types of announcement. In fact, it's really one type of announcement from my definition of an event when I'm never going to buy on open. And these type of announcements are profit upgrades or profit downgrades. Now, the reason I exclude profit upgrades and profit downgrades is because there's no debate whether a profit upgrade or a profit downgrade is good or bad news. A lot of the times when you actually do see a significant announcement, price sensitive announcement from a company, particularly full-year, half-year results. There can be a lot of debate about whether the results are positive or negative. So when the company share price does open, you can see a lot of volatility in the first 10 minutes, 15 minutes of trading. And that's why I never buy on open, because I don't really know how the market is going to react, because you have to exclude those first 15 minutes of trading. Because if we go back to that Wall Street adage, and even though I don't really believe it, and amateurs do open the market, there's going to be a lot of nervous amateur investors out there who see the results, who see the indicative price down 8% on open. They think these are really bad results. I'm going to have to sell straight away. So they make their decision to sell straight away, think the share price is absolutely going to tank. And we've seen 3 occasions in the past week when the share price has opened significantly lower after release of full-year results, and then the share price almost immediately rebounds. And the shifts or the changes in share price in these one trading days have been significant. For instance, one of the companies I'm going to talk about, we saw a 20% shift in share price in about 15 minutes. The share price opened 8% down, and then within 15 to maybe 20 minutes, the share price had rebounded to be up 10%. So those who opened the market were completely wrong in regards to this particular announcement. So I've already talked about 3 examples we've seen in the past week. So let's talk about those 3 examples. 2 of those examples occurred on 9th of August, and those were Megaport and REA Group. Megaport for the day actually rose 10%, up 82 cents, closing at $9, while REA Group was up 6.7%, up $8.30, closing at $132.32. But on open, share prices of both of these companies were down. Particularly Megaport was down 8%, only a few minutes after the share price opened. So let's have a look at the charts for these particular companies just to see the wild swings, the volatility in the share price on open after these companies released their full-year results. First company we're going to look at here is Megaport. And so this is a 1-minute chart. And this goes back to about 3:20 p.m. on the 8th of August, and then the first 2 hours of trading on the 9th of August. And you can see in the first 5 minutes of trading, the share price was down 8%. So it went down from about $8.20 down to $7.60. So it took 5 minutes before we saw that low for the day. So 5 minutes after opening. And then almost immediately, we saw a significant rebound in the share price. In fact, the share price rose from $7.60 to $8.90 in about 15 to 20 minutes of trading. So that's why you should refrain, well, why I refrain from buying on open, simply because you can see this volatility. And those first 5 minutes of trading doesn't tell you that the full-year results from Megaport were negative. It was just an overreaction from the market. And unfortunately, in my opinion, the majority of the overreaction in this case was from retail investors. Now on to REA Group, and in fact, their share price reached a low in the first minute of trading. So the share price was down only 1.5% in the first minute, down to $122.50. And then you can just see the significant reaction from the market in the next 20 minutes. Share price rose from $122.50 to about $127 in about 20 minutes of trading, and the share price kept on rising during the rest of the day. Third company I want to talk about is Credit Corp. This company released their full-year results on the 2nd of August, and just like Megaport and REA Group, we did see initial negative reaction from the market, a fairly significant negative reaction. In fact, the share price was down 15% in the first minute. Share price went down as low as about $20.50. Share price then leveled off over the next 7 minutes. But then we saw the share price gradually recover during the rest of trading on the 2nd of August. And over the next week, we saw the share price continue to rise. And in fact, the share price closed at $22.65 on the 9th of August. Now, I'm not going to say that amateur investors open the market here. Now, I'm being a little bit condescending, calling retail investors, mum and dad investors as amateur investors, but they're the most likely type of investors who saw these results Didn't quite know or understand what if these results were positive or negative. Saw the indicated price down 10% and thought, well, these results are horrible. I'm going to have to sell at open, and that's what drove the share price down 15% in that first minute. Just an overreaction from the market. Now, I did have a very quick look at Credit Corp Group's announcement. It didn't seem that negative, but they did give a forecast for financial year 23. And that forecast was for no growth in the next financial year. Now, Credit Corp Group's management tends to be quite conservative when they do outlooks or any sort of guidance, and you have to take that into account. So I do think there is a potential play here for Credit Corp. Unfortunately, if we do see a significant recession, Credit Corp their financial state will be affected by that. But I think an overreaction from the market is an opportunity to take a position in a company you think could be a good play for the long term. And that's all I have for this video, looking at one of my little investing rules. Never buy on open when a company has released a price sensitive announcement, particularly when that price sensitive announcement, there could be a little bit of debate whether it is positive or whether it is negative, just like financial year results, half year results, or any of those types of results. If you have any thoughts about one of my this little investing rule, if you have any questions, if you completely disagree with it, I'd love to hear your opinion. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.